This video is about Itochu's fiscal year 2025 full year financial results, period from April 2024 to March 2025. Itochu Corporation is a major Japanese general trading company, Sogo Shosha. It is one of Japan's largest and most diversified conglomerates, engaged in a wide range of businesses, including textiles, machinery, metals and minerals, energy, chemicals, food, ICT, finance, and retail. Itochu Corporation, Mitsubishi Corporation, and Mitsui & Co. are Sandai Sogo Shosha, which refers to the big three general trading companies in Japan. Summary of fiscal year 2025 business results. Itochu Corporation achieved a record-high consolidated net profit of 880.3 billion yen, representing an approximately 10% year-over-year increase, driven by continued highly efficient management. Core profit declined due to falling resource prices, delayed turnarounds in certain businesses, and deferred profit contributions caused by the postponed timing of new investments. However, in the non-resource sectors, core profit grew thanks to steady progress in post-merger integration efforts at CTC and Dakin, though performance across individual businesses remained mixed. CTC Itochu Techno Solutions Corporation is an IT services company, and Dakin Corporation is a building materials and housing equipment company. Itochu made several high-quality investments, including the privatization of Descent and CI Tacaron, as well as an iron ore project in Brazil. Itochu approved approximately 1 trillion yen in total investment, which also includes projects scheduled for execution in fiscal year 2026. Descent is a Japanese sportswear company, and CI Tacaron is a manufacturer of plastic and chemical products. Itochu maintained a total payout ratio of approximately 50%, with a dividend of 200 yen per share, an increase of 40 yen from the previous year, and conducted share buybacks totaling 150 billion yen. Itochu achieved higher revenue and profit, making fiscal year 2025 another strong and successful year. Summary of fiscal year 2026 management plan. Itochu is expected to achieve a record-high consolidated net profit of 900 billion yen in fiscal year 2026, marking the second consecutive year of record earnings. This reflects the company's strong resilience despite a challenging and uncertain global business environment. This strong outlook is the result of overcoming previous challenges and enhancing the performance of existing businesses through a more hands-on and focused management approach. Itochu is also steadily advancing its growth investments, with a plan to invest up to 1 trillion yen, following its policy of no growth without investments. These investments are aimed at expanding business areas and strengthening the foundation for sustainable long-term profit growth. Itochu continues to follow highly efficient and globally aligned management practices, with a financial and capital strategy that remains consistent. It focuses on balancing three key priorities: growth investments, shareholder returns, and control of interest-bearing debt. Itochu also plans to maintain a total payout ratio of 50%, which has exceeded its minimum target of 40% for 2 years in a row. This shows the company's strong commitment to delivering returns to shareholders through dividends and share buybacks. FY2025 Business Results Review. Core profit fell by 19 billion yen year-on-year to 770 billion yen. In the non-resource segment, profits increased by 26.5 billion yen, despite mixed results in existing businesses. This growth was mainly driven by a steady recovery in pork-related businesses. In the resource segment, profits declined sharply by 39.5 billion yen due to falling resource prices and operational problems in 2 coking coal projects. Like other major Japanese general trading companies, Itochu also saw a drop in resource business profits due to lower commodity prices. However, since 79% of its core profit comes from non-resource businesses, Itochu's earnings remain relatively stable. Consolidated net profit by segment. FY 2025. Consolidated net profit increased by 78.5 billion yen to 880.3 billion yen year-on-year. And for fiscal year 2026, net profit is forecasted to increase to 900 billion yen. In textile segment and energy and chemicals segment, for fiscal year 2026, these segments' profits are forecasted to decrease due to no big one-time gains this year. However, Descent and CI Takeron will help by becoming more profitable after acquisition. In machinery segment, profits are expected to rise thanks to strong performance in North American power plants and more projects in renewable energy like solar. Hitachi construction machinery will also add profits. In metals and minerals segment, losses will be reduced in 2 coal projects by improving operations. But overall profit was still affected by lower resource prices and exchange rate changes. In the 8th company segment, profits are forecasted to go down due to no big one-time gains, but Family Mart improved by focusing on popular products, building its brand, and expanding stores. Itochu also plans for additional one-time gains and aims to achieve a net profit of 900 billion yen for fiscal year 2026. Share repurchase. Itochu has announced that it will repurchase its own shares to implement a flexible capital strategy. Itochu plans to repurchase up to 28 million shares of its common stock, about 2% of its outstanding shares, with a maximum total amount of 150 billion yen. The buyback will take place between May 7th, 2025 and December 31st, 2025. Itochu's share buyback is a positive move that shows confidence in its business. This will help boost shareholder value again. FY2026 shareholder returns. Itochu aims to maintain a total shareholder payout ratio of 50% for fiscal year 2026, continuing to exceed its long-term management policy target of 40% or more for the second year in a row. This reflects the company's strong financial position and commitment to returning value to shareholders. In terms of dividends, Itochu plans to increase payouts in line with earnings growth, with a goal of reaching a consolidated net profit of 940 billion yen in the near future. The dividend policy for fiscal year 2026 is to pay whichever is higher, 200 yen per share or 30% of net profit, ensuring both stable and performance-linked returns to shareholders. Additionally, the company plans to conduct share buybacks totaling approximately 170 billion yen, further enhancing shareholder value by reducing the number of outstanding shares and increasing earnings per share. It's unfortunate that there was no dividend increase this time, but Itochu will carry out a share buyback, which is also good for shareholders. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 7,042 yen as of May 2nd, and the US dollar stock price is $98.40 as of May 2nd. Current PBR is 1.73 and PER is 11.1. Dividend yield is 2.84%. Compared to the last few years, considering PBR, PER, and dividend yield, current stock price is relatively still a little bit higher. Itochu's share price has steadily increased over the past few years, and since its earnings and dividends have also grown each year, the dividend yield has stayed stable, showing that the rise in share price is healthy and well supported. Although the share price dropped slightly after this financial results announcement, likely due to no dividend increase being announced, the company's overall performance remains strong. Itochu's current dividend yield is 2.84%, which is lower than that of Mitsubishi Corporation or Mitsui & Co., but this reflects Itochu's popularity and strong demand among investors, which keeps its share price high. Conclusion. Although it's a bit disappointing that there was no dividend increase this time, share buyback will still be carried out, maintaining Itochu's usual commitment to shareholder returns. Mitsubishi Corporation and Mitsui & Company are forecasting lower profits this fiscal year due to expected declines in resource prices, whereas Itochu is forecasting increases in profit. Itochu has a strong advantage in non-resource businesses, which could enhance its competitiveness going forward. Since Itochu is also moving forward with new business initiatives, Itochu's future business performance looks optimistic.